Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, December 6, 2013. Quite a bit of action today, as pretty much expected because of the U.S. unemployment report. We'll get to that in a second. Out of Europe today, German factory orders down 2.2%, kind of a disappointment. Expectations were for a decline of 0.4%. So considerably more, and almost wiping out last month's 3.3% increase. So really not very good. Out of Canada today, some pretty good employment numbers. Employment change up 21.6 thousand. It's pretty decent, much more than the 7.6 that was expected. And also unemployment rate at 6.9%, staying steady at what it has been. In the U.S., the big non-farm payroll number, 203,000. Expectations were for 184, around 180, and last month also being revised up, or I'm sorry, being revised down just slightly, but still above 200,000. So looking very good here for employment numbers. Also, the actual unemployment rate ticked down to 7%. That is from 7.3 last month. Expectations were for a tick down to 7.2. So we are seeing more people working. Also, the longer-term unemployment rate dropped as well. Very encouraging signs. However, it's still not enough, but it is encouraging and it is ongoing. So that is important. Also out of the U.S., University of Michigan consumer sentiment numbers came out at 82.5. Much better than the 76.2 that was expected, and considerably better than last month's 75.1. So very, very good. Consumers becoming more confident. They're doing more things. We saw that this week also in vehicle sales. We've seen it in many things so far. So we're certainly looking good, especially going into the holiday season. If it can continue after the first of the year, that would be very positive for the U.S. as well as for the U.S. dollar. It would also encourage the Fed to start tapering. More than likely, they're going to start to do that come January. There's some expectations that they'll do it at their next meeting here in a couple of weeks. Probably not. They will probably wait till we get some numbers for the end of the year, which would be the end of January. So probably we'll wait till then. We'll wait and see. All right, on to the technicals. Euro-US dollar today climbing about 30 pips right now, pushing the 137 envelope here, and really looking like it's getting awfully tired up here. Looks like there's a lot of enthusiasm still with the euro here, and to be long the euro as opposed to many other currencies, not only the dollar. So a lot of enthusiasm. As a matter of fact, it's really, I think, too much. We're looking at a very quick move up here above resistance, kind of going to a test of the highs here around the 138 level. So I'm dubious as to whether we actually get up there and try to exceed that. We look out here on the weeklies, we can see how now this week very well extended, pushing up towards those highs. Getting up towards these highs that we had back here in earlier of 2012, 2013. So this is really not a market that's showing a lot of robust enthusiasm here. It's showing some short-term enthusiasm, and if we jump out here to the monthlies, we can see how the angle of ascent here is really not a very good angle. It's not got a lot of conviction behind it. Not like we had back here where it bumped way up very quickly. So this time we're really running out of steam here very, very quickly, and it's very vulnerable to a quick sell-off. Pound dollar, kind of the same scenario here. We're jumping up today just slightly. We're up about 9. We were down most of the session. We've been all over the map here, but again, very, very much enthusiasm here that the UK has turned the corner, that the bad times are behind them, which it may very well be. However, there's two sides here always, and the US dollar, being the US economy, representing the US economy, can also have a very good time here. And I think we're going to see some fighting out here and some more consolidation with a little bit of downward bias as we move on into the weeks here. And on the monthlies also, same kind of thing. We're still within that consolidation. We're on the upper end of that range. We could pop up to the 166, 167 level and still only be completing this pattern here of consolidation, in which case we would still need to get down here and test these lows down around the 130s eventually. U.S. dollar against the Swiss franc getting hammered again today, down 40 pips right now, down to the lower 80 area. Really took off this last couple of days here and broke through this minor support that we were following down. Now we're actually testing these old lows that we made back in October, and it probably will be only a test of those lows. The fact that we picked up so quickly here in the last couple of days really shows that we're probably blowing off on the bottom here. On a weekly basis, it looks even worse though. It looks like we could continue on and sell off even further. That may turn around here though, because it is 4 weeks now that we are down, and we have retraced the gains that we had made for 2 weeks there coming off of those lows, but we are sticking with this angle here, so it's very possible we could continue. Now on the monthlies, really looking like we're bottoming out, because the last 3 months now, including this month, is very small in the range, and that is usually indicative of a market that's about to break to the opposite direction. And we've been moving downward here now for about almost a year, and it is time for us to rocket back up. In this next move, we should take us up above these major trend lines that go back multi-decades. That would start then a new uptrend. This continues to be the low, and very unlikely we will get down to that spike low. Where we're at right now is pretty good support. We should find very good support here even in the short term. If we do poke down below it, more than likely we'll come roaring right back. So that's the scenario there. US dollar against the Japanese yen up beautifully today, up 111, pushing the 103 envelope here, and really we sold off for kind of midweek this week, and now we're almost right back up to where we started off the week. So very good strength here. Looks like we're going to pop up through and make some new highs here probably next week. And on the weekly basis, well, we've been up now 7 weeks in a row, but we've seen this happen before. We'll go up 10-12 weeks at a time and just keep going. It looks like that's going to happen again here. We're probably going to break out through here and then just keep going. On the monthlies, we can see probably the next stopping point will be around that 109 level, which is really not all that far away. So once we break out there and close above it on a weekly basis, we'll keep going. Euro Swiss, same kind of scenario as the dollar Swiss, getting hammered here down to the most recent lows again, and really doing a really oversold situation here. We can see this curvature in here and then this extreme sell-off. Very indicative of a market that's about to bounce back. Very dangerous here, especially for this market. It likes to do this kind of thing, sell off and then come roaring back. So here we are in the lower 120s again, 122s again, and we could very easily next week pop right back up here, get back up to the mid 123s or even higher, and start off with a new little uptrend. Euro yen also experiencing another breakout today, mostly due to the strength of the euro and the weakness of the yen. So we got a kind of a double whammy here. We're breaking up now. We're about 141. We've exceeded the targets that we had around 137, 138, and now we're breaking out to some new highs here. Not really sure how far we can really go. If we jump out here to the weeklies, we can see it. We got a pretty good angle going, very much like back here. So this could be something that could be sustained for a while. Jumping out to the monthlies, well, is it possible that we could get up to that 165, 170 level that we were at? Yes, it is very possible. However, the weakness in the euro, there could be a coming weakness in the euro, and that could sustain that from reaching those highs, and it could throw us into a consolidation period here for a while. Even though the yen would continue to weaken, the weakness of the euro would hold us from this pair running off and making some very extreme new highs there up around that 160, 170 area. US dollar against Canadian, all over the map today. Right now we're up about 6 pips. Very, very large range. At one point we did go up and meet the highs that we had made earlier in the week. Then we were down, made lows. We've been all over here, and ultimately really looking very strong. This is probably going to work out here in this area to be a little bit of a consolidation before we move up again. On the weeklies, we still look very good. We're still finishing very nicely for the week, and really looking like we're probably going to break out here quite strongly. We jump out to the monthlies. We can see we've talked about this curvature before. It's now starting to accelerate. We're breaking out to the upside here. Really the next stopping point around the 116, 117 level. We get up in there, maybe we back off a little bit, then jump up to the 130 mark. Market's very strong, looks very good for the US dollar as opposed to the Canadian, so building a lot of momentum there. Australian against the US, up 40 today. We've been all over the map this week, and kind of just settling out the week where we more or less started, and today's action kind of showing that we're in this little consolidation phase here, not quite ready to sell off completely, but it does look like it's coming, especially as we go out here into the weeklies. We can see now we've been down 7 weeks in a row, so we are due here for a little bit of a consolidation, maybe an up week or two, but very, very minorly before we start to sell off again. And on the monthlies, well, only 1 week into the month, hard to make the judgment, but we clearly have a turnaround here from this little correction, 2-month correction that we had, and so now it should be onward and downward to the lower 80 area here. So the first stopping point we should see probably around 84, 85, 86, maybe by the end of this month, and then into January into that low 80 area that we've been looking for several months. So that is it for today. Hope you are a member of FX Addicts. If you're not, please stop on by. We do offer a 7-day free trial, and I am available most of the day to help you out, answer questions. We also offer a live trading room, chat room, and daily emails. So please feel free to stop on by, check us out. If you have questions, shoot me an email, tim@fxaddicts.com. Thank you.